Wealth flows through structures designed not for earning more, but for keeping more. Businesses become shields, turning taxable income into assets hidden beneath legal protection layers. The system rewards those who understand rules rather than those who simply follow them. Every expense becomes strategy, every purchase becomes deductible, every decision becomes deliberate planning. Money never sleeps, it shifts quietly through entities built for efficiency, not emotion. Corporations transform ordinary costs into tax tools, reducing liabilities with lawful precision and timing. Assets move strategically, not randomly, each transaction crafted to minimize governmental reach. The code itself becomes a map, guiding wealth through corridors of complex opportunity. Income changes form, reappearing as investments, loans, or operational costs on paper. Nothing hides illegally, it simply adapts to the very laws that created it. Every rule written has a reason, understanding it creates advantage invisible to the untrained. Where others see income, businesses see reinvestment. The difference defines who keeps wealth longer. Depreciation becomes silent profit, lowering burdens without changing actual financial strength inside systems. Real estate structures generate losses on paper while generating cash in real time. Debt becomes a tool, not a trap, shifting responsibility away from taxable positions. Leverage multiplies assets, allowing growth without surrendering ownership or paying excessive obligations. Corporate entities separate income streams, turning complexity into shields against taxation. Tax credits, incentives, and loopholes are written into law to encourage economic movement. Wealth flows where governments want growth. Energy, innovation, and infrastructure become safe havens. Every nation rewards investment, not consumption. The system itself favors long-term asset builders. Businesses redirect profits into expansion, reducing exposure while amplifying operational potential. Earnings convert into machinery, technology, and research, all tax-efficient forms of reinvestment. Ownership shifts between entities, keeping wealth in motion and taxation minimal throughout transitions. Holding companies manage everything from patents to property, centralizing power with minimal tax friction. Offshore entities act as neutral grounds, balancing global flows under lawful frameworks. Foundations convert taxable success into lasting influence while maintaining structural protection legally. The system rewards control, not possession. Control avoids taxation. Ownership attracts liability. Licensing agreements generate passive income under different jurisdictions, separating value from tax exposure. Trademarks and brands become assets leased across regions, reducing taxable profits through royalties. Each structure is intentional, built not for show but for financial endurance. Money reinvested stays untaxed, growth compounds inside systems shielded by corporate law. Governments design these routes, incentives exist to encourage reinvestment, not punishment for success. The code isn't broken, it simply favors strategic understanding over emotional reaction. Every deduction is a story of alignment between policy, profit, and long-term stability. Tax-free income isn't hidden, it's structured, existing in plain sight under compliance. Businesses operate as vehicles, not destinations, designed to transport wealth safely through time. Capital gains deferment allows growth while delaying taxes until strategic liquidation moments. Trusts protect accumulated assets, ensuring preservation across generations with minimized taxable events. Retirement accounts, credits, and write-offs form an ecosystem of perpetual financial optimization. Losses are engineered intentionally. Paper declines fueling real advantages inside intricate frameworks. The system encourages risk. Tax laws are built to reward calculated innovation. Incentives exist for creation, investment, and scale, not for hoarding idle wealth. Businesses that reinvest expand untaxed, growing value far beyond individual capacity or effort. Wealth compounds when taxation slows. Every delay becomes exponential advantage through reinvestment. Corporate borrowing replaces personal spending. Debts reduce taxes while maintaining control of capital. Governments trade taxation for growth, inviting capital to stay active within borders. The wealthy don't escape taxes, they navigate systems designed to guide capital flow. Financial intelligence becomes leverage, transforming compliance into opportunity under structured regulation. Wealth isn't evasion, it's alignment with the very architecture of economic law. The game isn't hidden, it's written, and those who read it win silently.